Hi, this is Brandon Bischoff with Canterbury Investment Management. The week is January the 6th, 2020, and this is the Canterbury Market Update. And so if we start with the market state, we are in a bullish market state one and have been for 14 consecutive trading days. Another thing to note is that the NASDAQ has been leading the way for the markets, which is a good sign for being in market state one. We want to see the NASDAQ outperforming the S&P, which is currently happening. Canterbury Volatility Index currently has a volatility reading of 47, so volatility is low and stable. And last week we mentioned that it was at volatility level of 45, which is in extreme low territory. So last week it actually rose 2 points on the short week. But basically volatility is pretty much in that extreme low territory or right on the cusp of it. Low and decreasing volatility is a bullish characteristic. Just be aware that when volatility hits extreme lows, you could see a spike in volatility or some outlier days. No telling when that'll occur and what extent it'll have, whether the outlier days on the upside or on the downside. Market comment, when analyzing the stock market, we like to look at the S&P 500 sectors. And so the Dow Jones Indices website actually breaks the S&P 500 down into 11 different individual sectors, and this chart kind of shows the weightings of each one of those. And so if we're looking at this, we can see that technology by far and away is the largest sector in the market, making up about a quarter of it. And then on top of that, communication services, which are companies like Google, who are technology related, make up another 10%. So there's basically a third of the S&P 500 is kind of technology related. And so what we did for a study is we took sector data using the State Street, kind of global State Street S&P 500 sectors, which go back to about 1999. We took sector data and looked at the yearly performance for those sectors. And what we found is that basically on average each year, around 4 to 6 sectors outperform the market, which makes sense. Roughly half of the sectors will beat the market and roughly half of them will not beat the overall market's performance. But if we're looking at 2019, only 2 sectors actually outperformed the market, and that's the first time that's ever happened. And the one sector is financials, which for most of the year wasn't that great, and then had a sharp rally and ended up beating the market by just a hair. And the other sector is technology, which again makes up a quarter of the market. So the technology sector, by far and away actually outperformed the rest of the market. And many sectors did have strong 2019s coming off that December 2018 trading anomaly. So the low was at the very end of the year, and so it had a sharp rally to start the year, which makes sense. But technology by far and away exceeded everything. And then if we break down the technology sector even further, 40% of the technology sector is in 2 stocks, Apple and Microsoft. So basically, those 2 stocks had great years, pulled technology up, and then technology then had a great year pulling a lot of the market up because it's such a big component in the S&P 500. But we'll talk about that in a minute. One thing we like to point out, so here healthcare had an interesting year. The healthcare sector is made up of healthcare equipment, which is about 32%, healthcare providers about 18%, and pharmaceuticals is actually about 40%. So pharmaceuticals is the largest sector, and then there's some miscellaneous sectors that make up 2 or 3% of it. But if we actually look at like healthcare equipment or like medical devices, which we're using the ETF IHI, we can see that had a really good year. Had a lot of good bullish characteristics, low volatility, upward trend, and you can see that in this chart. But if we actually take a look at the healthcare sector as a whole, and we combine it with pharmaceuticals and industry providers, healthcare basically moved sideways all year long up until the last couple months, where it actually just shot up kind of like a rocket almost to end the year. And that's actually because its largest component, pharmaceuticals, had been a dog for most of the year. So you can see in this chart of pharmaceuticals, you see a sharp decline and then a sharp parabolic advance to end the year, which is kind of what we saw in the healthcare sector. The sharp parabolic advance, kind of pulled that sector upward to end of the year out of that trading range. Because for most of the year, medical devices was going up, but this sector was sharply declining. This brings us to portfolio efficiency. Currently, the portfolio thermostat has low volatility, it's in a bullish portfolio state, and has a sufficient benefit of diversification. In this update, we did talk about the S&P 500 sectors a lot and how most sectors performed about the same, with technology leading the way. We also mentioned that the technology sector is heavily weighted toward Apple and Microsoft. So a substantial drop in Apple and Microsoft are going to cause a substantial drop in the technology sector. Technology sector is heavily weighted in the S&P 500, which would then cause, kind of a drop in the market. So in other words, the S&P 500 is not a diversified portfolio. And that's something really important to remember there. The Canterbury portfolio thermostat, on the other hand, can hold positions in equities, but also in alternatives to equities, like bonds or like gold. So gold's seen a really nice run up to end the year, and it's not really correlated to the equity market. And then bonds currently have low volatility and other bullish characteristics. And so when it comes to equity management, the portfolio thermostat has the ability, given all the diverse amount of exchange traded funds out there, there's 2,000 some ETFs. Portfolio thermostat can hold, or did hold for 2019, medical devices while avoiding something like pharmaceuticals. So all assets are going to have, bull and bear markets, but we have to have a system for being able to choose which securities are going to go into the portfolio, and then a system for weighting those securities to maintain a sufficient benefit of diversification and low volatility, which the portfolio thermostat, being an adaptive portfolio strategy, does just that. So I hope you have a great week. That brings us to this end of this update, and we look forward to talking with you soon.